Hey everybody, it's your girl Mahogany here with Mahogany New Home Rebates, and I'm here today to help you understand exactly how you can take our 2% rebate new home program and use that to lower your mortgage interest rate. Now, before we actually get into the nitty gritty of how you can actually accomplish that, I want to explain to everybody to get everybody on the same level of what exactly the mortgage interest rate is and why it's important that you do this for now and over time. All right, so let's get into it. So what is an interest rate? Pretty much when you go get a home, right? And if you are not in the position or you don't even want to, for that matter, pay cash for that home, say you just want to maintain all that capital in the bank, which is smart these days, then you want to go apply for a mortgage loan. Okay, so when you do that, you're pretty much getting a agreement between you and a lender, the person giving you that money to buy that home, basically saying, hey, I'm going to agree to pay this money back. And I'm not only agree to pay this money back, but for you doing me that favor, quote unquote favor that they're getting paid for, I'm also going to pay you back money on top of the money that I owe you for helping me out with giving me this loan. That's your interest. And how much you pay back on top of what you actually owe to them for the house costs is your rate. So if the higher that rate is, the more you're going to pay back on that loan. The lower it is, of course, the less, right? All right. Why is it so important to get your rate low? Other than what we just said, the fact that the higher it is, since it's going off a percentage of what you actually pay for the home, the more you're going to pay back. Additionally, it's going to be the more that you pay back over time. So in the next example I'm going to show you, it'll show you exactly what that means between not only what you pay back over time, but also what you're paying in a monthly payment. That's really what we kind of care about, because we want to know what's kind of going out on a monthly basis, coming out of our paychecks on a monthly basis to live in dwelling in a house, in a building, right? So we want to try to get that as low as possible so we can spread our dollars elsewhere, whether it be investments, fund, whatever, right? So let's get into that. Now let's take this $400,000 home, which is, yes, actively on the market right now. They're still out there. If you took this $400,000 home and you attached a 5% interest rate to it, and you had what we call a fixed loan, meaning that your payment is going to stay the same no matter what happens in the market for the next 30 years or the next 360 months. They're the same thing. You'll see them represented the same when you look at your paperwork. So if we're going to use this home, right, let's look at some math and look at all the numbers on it and how that interest rate works and why you want to get that as low as possible. So now let's take $400,000 here, right? That's your loan amount, your 30 years, or you can also see it as 360 months, and your interest rate of 5%. If your payment started in July, this month right now, then you would be paying $2,147 a month, and some change is just not represented here. Now, at the end of that 30 years, this is how much you would have paid in interest. $373,000. That's a whole nother house. That's almost the exact same house you just bought, right? And overall, $400,000 plus the interest you paid is this much. Now, that's a lot, right? Now you look at that number and you're like, man, I paid a lot. So I really want that number for that interest rate to be as low as possible. This chart down here simply just shows you the balancing of the two, of when you have that fixed payment, how much you're actually paying in interest versus how much you're actually paying in your principal meaning the actual balance of your loan for the $400,000. And when those shifts happen, as far as when it happens to go to more principal versus more interest. I'll show you a bit more about that in the next slide. Okay. So again, 360 months to repay $400,000 at 5%. Your payment is going to be steady and fixed here at $2,147.29. That's not going to change as long as you don't refinance or do anything crazy, right? We're different. Now notice, remember what we said in this chart here. This is your interest. See how it's higher than what your principal is being paid, and it stays higher. It starts to go down as it starts to go up, but it stays higher until you actually get to probably about 2040, whatever the case may be. This loan looking at being paid off in around 2052. So when you get to about 2040, that's when you start putting more towards your principal than you put towards your interest-ish. But in the beginning, you're going to be paying $1,666.67, all sixes, in interest, and only $480 towards your principal. Now that's kind of depressing, right? So I say, oh my gosh, I can't have that. I need a lot more to go towards my actual principal than towards that. And at the end of every month, they're going to take that 5% interest rate, and then they're going to multiply it by this. And that's when they get the new amount for what the interest is going to be. And so now you see it's gone down $2 and this has gone up $2. Doesn't always work equally like that, but this side will always go down while this goes up very slightly, very, as you can tell. So it's very indicative of you, very important to say, I want to pay less here and I want to pay more here so I can pay it off quicker and end up paying less overall. If you have any questions on that, please don't be scared to reach out, hesitant to reach out and let me know. But I know that seems daunting, but there is hope. Normally, the only way that you can actually get that interest rate down is by buying it down yourself. But thankfully, Mahogany Group New Home Rebates, we buy that rate down for you, at least 2 points. Now let me go into what points are. So when you buy your rate down, that interest rate down, it's known as 1 discount point per every time you buy it. And that 1 discount point normally charges you about 1% of your actual mortgage amount or your purchase price, whatever you want to call it. So 1% of $400,000 is what? $4,000, right? And when you're buying it down, let's not get it twisted. You're not going to go from 5% to 4%. A point is typically only 0.25%. So you'll go to 5% to 4.75% and so on and so on. So that's just a point. Now, when you're taking it down by that, us giving you that 2% of your actual purchase price back, you can now buy your point down 2 points, a whole 0.5%, thus saving you $120 a month. And overall, that 30 years is going to save you over $40,000, which is a nice car. So normally it would take you about 5.5 years to break even of that upfront cost. And we did that math by simply taking this number right here of what you're saving overall, and then dividing it by this number right here, of what you're actually saving per month. And the math of that is 5.5 years, a little over actually. But with us, you save that money up front from day one because we're paying it for you. Now, I could understand if you had to weigh the odds and say, man, I don't know if it's worth saving only $120 a month and I'm putting out that much money up front and I don't even know if I'm going to stay in this house this long. But when you're not paying that cost and we are, who wouldn't take a buy down, right? I don't know. Would you? All right. So with all that being said, I did say a lot. If this is your first time hearing of any of that information, I get it. It can be a little confusing. So please don't hesitate to reach out and ask questions, put comments below, and I'll get right back to you. You can call directly or text that number as well. You can email us. Or if you're just ready to say, look, I know the home I want to buy. I'm ready to go. I want that buy down, or I want to use the 2% for something else. Then simply scan, and then you can put in your name, your email, and your phone number, and we'll contact you immediately. All right. Everybody, it's been a pleasure. I look forward to explaining more on how you can actually use this 2% rebate and help you out in these times of craziness. And you guys have a wonderful day. Much love to you.